How long does the bottom of the property market last? You might think, I agree with you, Ed, it is the bottom of the market, but how long do I have, and does it really matter if I wait another 6 months? I'm Ed, an economist at Opes Partners, and this is Property Now. New Zealand property prices have started increasing. This report from the Real Estate Institute, which actually just came out the day before I'm recording this video, showed that house prices across New Zealand actually increased by 0.7% last month, and in Auckland, they increased a pretty substantial 1% in a single month. Now, it will take another 6 months before we can confidently say and look back, that was it, that was the bottom of the market. But by then it will be too late. So let's look at the data to see how much time we have. History doesn't repeat itself, but it often rhymes. And what I mean by that is the patterns we see in the past, they often repeat in the future. Now, the last time that property prices really took a tumble was back in 2008 after the GFC, and back then property prices fell about 10%. Auckland, that was down about 13.8%. That was the same in Tauranga. Christchurch was down 12.4%, and Invercargill, our most southern city, down 17.5%. But property prices can and do bounce back quickly. So imagine that you had a crystal ball and was able to purchase at the bottom of each market back in the 2008 downturn. How much money would you have made in just 6 months from the bottom to 6 months later? Well, if you did it in Auckland, property prices bounced back 4.2% in just 6 months. That's an enormous amount of growth. Let's put that into context for today. If the same thing happened in 2023 and you bought $1 million property at the bottom of the market in Auckland and the same increase happened, 4.2% in 6 months, you would have made $42,000 in half a year. Now, Auckland wasn't the only place that bounced back quickly back in 2008 either. New Plymouth was up a massive 7%. Same thing if we're looking at Invercargill, up 7.1%, and Queenstown up a massive 12.3%. So if you were buying in one of those places, you wouldn't have wanted to mess around, because if you had waited 6 months, you'd then need to borrow more money in order to buy a more expensive house, and you'd have missed out on that capital growth. But property prices don't bounce back quickly everywhere. If we look at a place like Nelson, property prices bounced back 0.5% in 6 months. Wellington City, Hamilton, Lower Hutt, all increased by less than 2% 6 months after the bottom of the market. So what does that tell us? Well, in some areas, you probably can afford to wait a bit. House prices might not increase that quickly. But in other areas, you want to make a move quickly. The bottom of the market just doesn't last. But that raises a really, really good question. How do we tell which parts of New Zealand will bounce back fastest? In 2008, property prices bounced back faster in the parts of New Zealand where they fell the most. So Queenstown Lakes District, house prices there fell 22.2%, but they bounced back a massive 12.3% in just 6 months. Let's compare that to Nelson City. They had the slowest bounce back, but why was that? Potentially because they had the smallest house price drop. And I often think of it a bit like a rubber band. You see, the further you stretch it down, the faster it springs back. If it only comes down a little bit, it doesn't bounce back quite as much. So the bigger the fall, the faster a turn. And you might think, well, what does that mean for us today when we are trying to make property investment decisions? Well, let's start looking for places that have fallen in value the most. Places like Auckland, which is down about 22%. If we look at South Wairarapa, down 32%, Lower Hutt, 28%, Wellington City, 25%. We've seen the largest price fall, so we've got the greatest opportunity for that bounce back. Whereas let's look at some other areas, maybe somewhere like Queenstown. Property values there only fell 2.5% compared to their peak. Not much opportunity for the bounce back. Same for places like maybe Marlborough, Tasman, and even Southland District. Now, that does not mean that Queenstown, Nelson, Tasman, those places, doesn't mean they're bad places to invest when you're investing for the long term. All I'm saying is they may not bounce back as quickly. And in fact, both Nelson and Queenstown featured in my top 10 places to invest in New Zealand video. And if you want to watch that, and others like it, make sure you hit the subscribe button. We release new videos every Monday and Wednesday. And if you do already subscribe, I want to let you in on a little secret about picking the bottom of the market. Now, I'm going to let you in on a little secret, something that really gets up my goat. Sometimes you hear property commentators talk about the median New Zealand house price. It's bollocks, because the average or median New Zealand house price doesn't tell me what's going on in my area with my specific properties. You see, if house prices are going up in Auckland, well, that will push up the average New Zealand house price, but that doesn't help me if I own houses in Invercargill where house prices might still be falling. And each region of New Zealand operates within its own property cycle, so each region will bottom out at different times. Let's take a look at the previous housing market downturn. Well, back in 2008, Lower Hutt bottomed out first. That was followed the next month by Nelson, and then a couple of months later, Christchurch, Palmerston North, those kinds of areas, and Napier as well. But it wasn't until a year later that we saw Hamilton bottoming out in 2010 and then Queenstown a couple of months later. So when you hear media reports at the moment talking about the New Zealand housing market taking a turn, it shouldn't mean a lot to you, because the area you own property in or the area that you want to buy property in, it might have already bottomed out, or it could still be a year away from taking a turn. And if you want to find out what's happening in your specific area, check out our Opes Partners website, opespartners.co.nz, to get all the data on your specific region. I crunch this myself and release it for free the day new data gets released. And that way you can make more informed decisions. And if you want help building your portfolio, make sure you hit that big orange button at the top, because we help regular Kiwis grow their wealth through new build investment properties.